What if I told you that the silver market just erased almost an entire year of gains in a matter of weeks, and what you're watching right now isn't random volatility, isn't just panic selling, but a controlled high-pressure reset that most retail investors won't understand until it's already too late? Silver has now fallen nearly 45% from its recent peak. Prices are sliding again today across global markets. And the same investors who were celebrating new highs at the start of 2026 are suddenly asking one urgent question: what just happened, and what do I do next? This isn't just another dip. This move has consequences, and by the end of this video, you'll understand why this silver crash matters far beyond price charts. Before we go any further, if you want clear, no-nonsense breakdowns of what's really happening in the metals markets, make sure you hit the like button and subscribe right now. It helps this channel reach more investors who are trying to make sense of chaos instead of getting trapped by it. Here on Silver Shockwave, we focus on what the headlines miss, and today's move in silver is a perfect example of that. Now let's slow this down, because the biggest mistake investors make during moments like this is reacting emotionally instead of understanding the setup. Just weeks ago, silver was riding a wave of optimism. Inflation fears were back in focus, central banks were under pressure, industrial demand narratives were everywhere, and silver had momentum on its side. Many investors believed 2026 would be silver's breakout year. Instead, what we got was a brutal reversal that wiped out nearly half of those gains. And here's the key point most people are missing: this crash didn't come out of nowhere. It didn't happen because silver suddenly became useless or because demand vanished overnight. What we're seeing is a collision between leveraged speculation, algorithmic selling, and a market structure that is far more fragile than most retail investors realize. When silver started slipping from its highs, margin calls kicked in. Traders who were heavily leveraged had no choice but to sell. That selling triggered stop losses. Those stop losses triggered automated selling from funds and trading systems that don't care about fundamentals. They only care about momentum. Once that chain reaction starts, it feeds on itself, and price falls faster than logic can keep up with. At the same time, the US dollar caught a short-term bid, bond yields spiked, and risk assets across the board started wobbling. In moments like this, silver doesn't trade like a safe haven. It trades like a high volatility risk asset. That's why the drops feel so violent. Silver goes up fast, but when it falls harder. And now add one more layer that almost no one on mainstream financial media is talking about: liquidity. Silver is not a deep market compared to equities or even gold. When big players decide to reduce exposure, prices move fast, very fast. And when they want to push price lower to reload positions, retail traders are usually the ones who panic first. This is where psychology takes over. When people see headlines screaming silver crash, they stop thinking long term. They focus on pain. They focus on losses. They hit sell not because they've analyzed the situation, but because they want the pain to stop. That's how strong hands are built and weak hands are shaken out. Ask yourself something honestly. If silver was a great asset at much higher prices, why does it suddenly become worthless after a crash? The fundamentals didn't disappear. Industrial demand didn't collapse overnight. Mining supply didn't suddenly surge. What changed was sentiment, and sentiment is the most volatile force in any market. Another uncomfortable truth is that a lot of 2026 gains were built on hype and leverage, not patience. When price moves too far, too fast, corrections aren't just possible, they're inevitable. The market always looks for balance. Right now, silver is searching for it in the most aggressive way possible. But here's where things get interesting, and this is the part most people aren't prepared for. Historically, the sharpest sell-offs in silver often happen before major structural moves higher. That doesn't mean price will reverse tomorrow. It doesn't mean this pain is over. It does mean that extreme volatility is a signal, not noise. Big money doesn't chase price at the top. It waits for fear. It waits for exhaustion. It waits for moments when headlines turn negative and retail interest collapses. And guess what's happening right now? Search trends are spiking for silver crash, and should I sell silver? That's not usually how major bull markets end. That's how shakeouts happen. Now, let's be very clear. This is not financial advice. Every investor's situation is different. But understanding the environment you're in is critical. If you're trading silver short-term, volatility like this can destroy accounts. If you're holding long-term, panic selling during emotional extremes has historically been one of the most expensive mistakes investors make. There's also a global angle here that most people are ignoring. Central banks are stuck. Debt levels are extreme. Industrial demand for silver isn't going away, especially with energy infrastructure, electronics, and emerging technologies still expanding. None of those trends disappeared because price dropped 45%. Price moves faster than reality. Reality catches up later. And that's why moments like this are so dangerous emotionally and so important strategically. If you're still watching right now, you're already ahead of most people. You're not reacting blindly, you're trying to understand. And that's exactly what this channel is about. Silver Shockwave exists to cut through the noise when markets get loud and confusing. Now let me ask you something, and I want you to think about this carefully. Who benefits from this crash? It's usually not the retail investor who bought near the highs. It's the institutions that can survive volatility, that can wait, and that can accumulate when fear is high. Markets transfer wealth from the impatient to the patient. This move is no exception. As we move forward, watch how price behaves, not what headlines say. Watch volume. Watch whether selling pressure slows or accelerates. Watch how silver responds to bad news instead of good news. Those signals matter far more than daily price fluctuations. Near the end of this video, I want to hear from you. Do you believe the silver crash is a warning sign of deeper trouble, or do you think it's a setup for something much bigger down the road? Drop your thoughts in the comments. I read them, and they help shape future videos on this channel. And if you found this breakdown helpful, share this video with someone who's confused or panicking right now. Sometimes one clear explanation can save someone from making a costly emotional decision. No matter what happens next, remember this. Volatility is the price of opportunity. Silver has always been a market that tests conviction. Right now, it's doing exactly that. Stay informed, stay calm, and stay ahead of the crowd. This is Silver Shockwave, and we'll be watching every move closely.